Welcome to our daily market update on Thursday, the 2nd of April. My name is Chris Marshall, Head of Investment Strategy here at Dragon Investment Managers. As we look around the world today, we have seen Asian equities trading mixed in their Thursday trading session. This really of investors hoping for a little bit more stimulus actually coming from the Chinese central bank than we actually saw come through. Markets were fully pricing in that we would see a more aggressive stance from the People's Bank of China, and in actual fact the amount put in was rather small, perhaps as they grapple with very high debt levels, although their statement is saying that they are going in a small way so that they keep more ammunition back for later in the year. If we look to other futures markets, it's around 6:50 a.m. here in the UK at the moment. We are really seeing the main news headlines play out through the European futures and US futures. US futures are pointing up on the open at the moment. Markets taking a little bit of optimism, I think, from both the Chinese getting back to work, productivity coming back online there. As well as the US Federal Reserve seeing cut liquidity ratios, the capital requirements of mainstream or commercial banks in a move to try and try and ease liquidity further in the lending system. Remember, of course, these mainstream banks have seen really massive inflows of cash from when we had that fire sale of all risk assets over the past few weeks, and this fire sale also being shown in a lot of the mutual ETF and collective funds in their flow data that came out over the past few days. And so this Fed's move is really one to just try and make sure that financial system keeps flowing. If we turn our attention to Europe for a minute, Europe, a lot of the indices there, the futures are pointing down on the open, and this is really a reflection, I think, of the members there, the European members, failing to be able to come together in any real kind of coordinated fashion to address this common European problem, European problem, which is, of course, now a global pandemic as well. And the idea that members should have medical budgets or medical supplies limited by their budgets, which the EU have stipulated, it is quite a ridiculous notion given the scale of the pandemic and certainly its grip on mainland Europe. We have seen some encouraging signs in coronavirus cases across Europe. Italy continues to show a lower amount of initial infections or hospitalizations. Spain, unfortunately, did have its deadliest day on record, but remember, death rates do seem to be lagging the infection rates by a couple of weeks. And so while we are seeing the initial infection rates decline in Spain, they are still seeing the death toll rise. Turning back to the fiscal measures within Europe, they are really needed. We're seeing a lot of stress signs that both households and small businesses are now actually struggling to keep liquidity, keep cash flow. And this is only going to really get worse while we see the real economy close down and effectively paralysed by government action. And until we see measures put in place which essentially keep the lights on for individuals and small businesses. Remember that the credit lines for small businesses and individuals are very, very different to the very large blue chip and publicly listed companies, which do have an additional credit line advantage in this case, in that we've already seen massive debt issuances from a lot of companies who are in poor financial positions to shore up cash flows and their balance sheets, really, to get them through. Of course, these facilities aren't available to the small traders, so they're certainly self-employed, and their cash flow funding is limited to both fiscal handouts and, of course, normal banking facilities. And so these measures are quite paramount, really, to prevent the European economy from atrophying in a very great way. And whether that's done through Corona bonds or emergency bonds or Euro bonds, there's also mooted a facility of ESM lines. It doesn't really matter. I think what really matters is that those leaders come together and they develop a system which gets money out very quickly. In the US, we have seen this timing issue as well, although they are far ahead of the curve of European in the fiscal stance. That the $1,200 checks which are to be mailed out still haven't been yet. And the longer that goes on, really the worse the kind of the credit conditions, and also how much the economy atrophies. And why this is really important is our base case is still that we do see a swift rebound once the virus is contained, and that's put to one side either through vaccination or governments getting the economy back online, as China have through continued social distancing measures, but ones which do allow people to get back to work. And what we really need to see is a step up in governments coming out with plans for that. But in the meantime, we are going to continue to need an awful lot of, I don't want to call it stimulus, it's really life support through central bank action and fiscal action. And the more that is delayed or withheld, the slower that rebound is really going to be, and it increases the chances of a much slower recovery on the other side, although of course we will eventually get there because the economy will rebuild itself over time. So that's really the key message for today is we're going to continue to watch those policy measures. We'll also keep a keen eye on the initial jobless claims number coming out of the US. Again, remember last week we saw the largest number in history, 3.28 million. I believe that the previous record behind that was just under 700,000. And I think we could fully expect to see another print number of the same. But markets are pricing in that extraordinarily bad news. They're fully expecting it. And so I don't think we will see that really shake markets as much as one would think, because that's already baked into the price. And when we look at this around the world, equities are pricing in a pretty deep recession right now. But one of the characteristics that we see of that is while we're seeing a deep pricing of a recession, it is pricing in a very short, sharp recession, and that is, of course, something which really hangs on both the ability to combat the virus, as well as governments coming together and putting together a plan which allows the economy to really start to get back online, as we have now seen in China, as well as many other Asian countries. So that's all from us today. I'll be back tomorrow with the other news headlines as they come through. So from myself and all of us at Dragon, thank you very much.